All right. So you're thinking about selling on Amazon in Canada because you're selling on Amazon in the US, or you just want to expand your sales and you just want to make sure you're doing it right and you want to follow the processes. Well, my name is Kevin from Maximizing E-commerce, and I help sellers expand their businesses to build international selling empires on Amazon. And I get a lot of questions about Canada. So I'm super excited that you are here so we can go over how to sell on Amazon in Canada. Now, just for clarity's sake, we're going to be talking about in terms of if you're doing FBA, where you actually ship goods into Canada, versus selling NARF, which you might be familiar as the North American Remote Fulfillment um, program, which basically in that program, you could send your products into Amazon in the US, just add listings in Canada, and then just start selling. And it sounds great because they ship from your US inventory, so you don't have to send anything into Canada. Sounds great, but is there a catch? Yes, there is no free ride. And so, what I have found, and what many sellers have found, is that doing NARF is better than doing nothing when it comes to selling in Canada. But generally speaking, your best sales will come from having local inventory, because with the NARF sales, the customer has to pay more for shipping. They're having to pay for duties. They're having to wait longer for the product to get there, versus there's going to be other products there that do have locally fulfilled inventory that's in a fulfillment center in Ontario or Alberta or British Columbia, and just magically arrives at their doorstep in a couple days because they're Prime and they don't have to deal with duties or paying extra for shipping. So for the customer experience, it's better to have this. So this tends to be a lot higher sales. And so, just for comparison's sake, there is no guarantee when it comes to selling in any marketplace, but it's always worth testing. But generally speaking, I tend to find at most sellers tend to say they get maybe 1-2% doing NARF. Sometimes I hear people say 3-4%, maybe 5 on the higher end. It's generally not great, especially if you have a competitive product. But if people are buying it at that price, it's usually a good sign that it's worth doing FBA, because FBA generally, again, depends on the product and depends on a variety of factors, but oftentimes is about 10-20% of their US sales. And the reason for that is Canada is roughly 10% of the population. And Canada is actually an overlooked marketplace, meaning that oftentimes people say when they want to go expand, they start looking at Europe, they start looking at Japan, they start looking at those emails they get that say, hey, come sell in UAE or Singapore. Now, those newer marketplaces are going to be okay to sell in. I wouldn't go into them right away. Let some of the kinks get worked out. Let the customers figure out some of those newer marketplaces like UAE, those newer countries where Amazon is located now. Some of the other ones are a little bit harder to start, but Canada is just neglected. But people have buying habits and use words to describe things very similar to what Americans do. So it tends to be a pretty simple one to get into. And I would say it's probably the best starter marketplace if you're looking to send an FBA inventory into another marketplace, just because it's also tends to be pretty business friendly and easy to figure out. So I have broken it down into what I'm going to say is a 3-phase process. And the reason I chunked it into 3 phases is just because this tends to be the buckets of about what it is to sell there. And I have a process where I help sellers expand into international marketplaces. So I've done this not just in my own business, but I've helped a lot of people with this. And we're talking about the whole process. So I have kind of learned to chunk the tasks you have to do it into 3 phases. And so this way it makes it a lot simpler than, you got to do this and you got to do this and you got to do this. But if you chunk it into, okay, this is this part, this is this part, and this is this part, 3 phases, it makes it much simpler and less overwhelming when you're trying to figure it out, especially if this is the first country you're going into and you've never done it before. So, first off, you're going to need to register. So generally speaking, in Canada, you would register on form RC1, which is Revenue Canada, form 1, for a business number, GST, HST, and import export. Now, my disclaimer here is I'm not giving tax advice, but generally speaking, most sellers, and this has been kind of a new thing I've heard fairly recently, like, do we still have to technically do it? I see no reason why you wouldn't. The way it's written, and feel free to comment if you've found some new law, but it's written, and I've checked it recently on Canada.ca that if you have at least $30,000, and that's Canadian dollars, which would be about 23-ish thousand US dollars, about $30,000 in worldwide sales. So sales not just in Canada, but everywhere else. So if you have more than $23,000 a year in sales in the US, you would theoretically be required to register for GST, and you need a number to get across the border. So you might as well start doing this. And so basically what you're going to do is you're going to fill out this form RC1. You're going to fill out the sections I just mentioned, the GST, HST, which is their sales tax, basically, the import export, and the business number. And basically you're going to fax that. Yes, I said that correctly. Fax it to them with your articles of incorporation. If you're a sole proprietor, you wouldn't need to provide articles of incorporation. You would just put that on the form that you're a sole proprietor. And it's if you're a sole member LLC, for their purposes, I have found in my conversations with them, they know what an LLC is. So the IRS might look at it as a disregarded entity. For example, if you're in the US and you have an LLC, they look at it as it's an entity. So just use your entity and your articles of incorporation. So you just check the box that you're basically other, and it's a limited liability company, and they know what that is. They're very familiar with registering Americans. And if you have any questions, call the Canadian Revenue Agency. Hey, I'm confused about this. They will be glad to help you out. I tend to find they're the nicest people in the world. So you're going to fill all that out. Then roughly 4 to 6-ish weeks later, sometimes I've seen it take as little as 2 weeks, and I've seen it take 3 months. And could be a variety of reasons. Maybe COVID happened. Maybe there was something happened that just caused all of a sudden there's fewer people working, or fewer working hours, or they're having to figure stuff out. Or there was one time a couple years ago where they required all the Uber drivers in the country to register for a GST number. And so that put their input output power behind. So their efficiency got kind of clogged, so to speak. So there's a backlog, I should say, of people registering. So it just took longer. So that's going to happen. But they tend to be very business friendly in the fact that you give them your documents, and then they, when it's time, they give it back to you. And you can call, and they're not going to get mad at you for calling. I wouldn't call every day, but just say, hey, where are you? And one little trick is, if you call, make sure you save the fax certification, which you can use. There's like a myfax.com, there's efax.com, and sometimes those will have like a free 30-day or 14-day trial. You can Google free faxes, or just go to the UPS store, or if you know somebody that has a fax or whatever. And so you're going to send that. Just keep the date and keep basically the receipt that that it was received on their end. And so faxes, if you're not familiar, they give you like a confirmation that it was received. So save that confirmation. So that basically your spot in line is based on your date. So the trick is, if you call them, say, all right, I sent this on March 1st. Let's say, as I'm recording this, is March 22nd. So you might say, okay, what date are you processing? So if 4 to 6-ish weeks later, you would think it'd be ready around April 1st, April 15. So if you're calling on March 22nd about your March 1st, say, what days are you processing? So if they say they're processing in like late February, that knows you're coming soon. If they say they're processing in January applications, and you sent yours on March 1st, they're a little behind. It's going to be maybe a few weeks before yours is ready. So just something to keep in mind when you call them. They're very strict about first in, first out. So first in, first out, and then eventually gets assigned to a case manager who gives you your numbers. The nice thing is, when you register, your business number is 9 digits, just like an EIN is, an employer identification number is in the US. And then basically your GST number is RT 00013001, following your 9-digit business number. And your import export number, which you need to get stuff across the border, is your business number followed by RM 0001. So RT RM. And you'll even see on the form with RC, it talks about RC or RT and RM. So it's like revenue taxes and revenue M port, I guess. I don't know. Um, so anyway, it must stand for something, but that's the code they use. So while you're waiting on them, like I said, it could take 4 to 6 ish weeks. You want to think of it as your goal is to get all the other stuff done with setup, which will be phase two while you're waiting. So, first thing you want to do is get the registrations done. If you have any other compliance registrations, like anything that has to get like a business, or sorry, uh, if you sell supplements, you get an NPN number, which is a whole different ball game. Or you need something, for a pet product or something like that. You would want to do the compliance stuff first, and then get the business number. So then what you're going to do is you're going to set up. So while you're waiting on the compliance stuff to get registered, you're going to focus on adding your listings. And generally speaking, you can add your listings if you have the either the ASIN or the UPC code. You can use that to match up with your US listing. Now, one thing that scares people oftentimes is they'll go into like Amazon.ca, they'll see their product is available for sale, and there's like 8 sellers selling it. And if, let's say, the product is $20 in the US, which would be theoretically around 26, 27 Canadian dollars, but it's being sold for $70. That's not a good sign in the sense that, like, people are buying it for $70. What happens is a lot of times there's bots that will, what's the word I'm looking for? Scrape a bunch of listings from the US, add them into Canada, and basically drop ship off your US listing. I wouldn't put too much stock in worrying about it. Once you have inventory, it's it's going to be fine. You're going to get the buy box. These oftentimes sellers come and go, so I don't put a lot of worry into them. But you can get that added pretty simply with your listings using your UPC or your ASIN code. And oftentimes and there's sometimes not a random reason when it doesn't work, but usually, as the time I record this, your um, your reviews will carry over. So you're not starting over from scratch, which is a nice thing. And then you want to start planning out your inventory. So once you have your import number, your business number, and everything else, be ready to send stuff across the border. Sometimes people like to start off with sending stuff as soon as they get that business number, just so they can say, hey, here's my stuff. And so they send in, have a plan for it ready to go. Sometimes they take some of their US stock and they send it in. You can't just send it straight from an Amazon FBA warehouse in the US to an Amazon FBA warehouse in Canada. You'd have to send it to like a third-party logistics warehouse. Or if you live in Florida like me and you have some laying around, you just send it from there. Or some people do send it straight in from China or wherever their supplier is. Just have them send it straight into Canada. So you have a plan for that. So you're ready to go when that business number comes, because you've added the listings. And then really the main thing was kind of more on the front end, I should have put it, and that is pricing. So let's say the conversion rate is 1.3, which it fluctuates around that. But let's just say it's about 1.3 Canadian dollars to every US dollar. So you could just say, hey, I'm going to take $1 and then, or take whatever my price is in the US and multiply it times 1.3. And there's things you can set up in Amazon where it does that automatically for you. I don't recommend doing that because there's just so many different factors when it comes to the fulfillment fees are going to be in the local currency. Your commission is going to be in the local currency. So there's all these different factors you got to take a look at. Usually your commission in Canada is going to pretty much match what your US commission percentage. Sometimes there's, exceptions, but you want to basically put it on a spreadsheet where you put, okay, here's my price I'm thinking about selling it for. Here's my costs, and all your costs, basically your local costs, will be in the local currency. So your commission, your selling price, your commission, your FBA fee, if you have PPC that you want to account for, that's all going to be in Canadian dollars. And then that's going to give you your number of what you're getting from a disbursement. And then you could put that into US dollars if you use US dollars as kind of your uh, baseline, and then say, okay, how much would I have gotten per unit for selling it in the US, and take a look at it that way. And then you might want to tack in a little bit extra for, if there's extra shipping costs or something along those lines, just because you will tend to find that your what's the word I'm looking for? Your customers in Canada will pay a little bit extra relative to what they would pay in the US. Not always, but that tends to be the case for a lot of sellers. Is Canadian buyers will pay extra for products, even relative to the currency price, just because Canada tends to be a more expensive country. And so when I talked about those gray listings where things were 2.5 to 3 times the price of what they should have been, people sometimes actually buy that just because they need it, because maybe they live in a super expensive city like Vancouver. One study I saw, I think it was Business Insider, had them number two after Hong Kong as the most expensive city in the world, or second most expensive city in the world, I should say. So people live in expensive places. Toronto's not cheap to live in. Montreal's not cheap to live in. And then, or people live out in the middle of nowhere oftentimes. And so just the convenience of Amazon, they just, if it's just not crazy, but like, if you would have sold it for $27, but maybe you want to try it at 29, you might get away with that just because people will pay a little higher. And I've been told that anecdotally by people that have lived in Canada. So then once you got everything set up and you're ready to go, you got your pricing figured out, you got your listings, you got your plan for inventory. So whenever uh, you get that business number, you're ready to send it in, because either it's at a third party logistics warehouse in the US, or you have it at home in the US, or your supplier is just holding some back from a recent shipment or something along the lines, ready to send it in. I would be ready to, and also, if you're going to have maybe 10-20% sales, you probably don't need more than about 10-20% of the inventory of what you would stock in the US, because sometimes it throws people off. They order a container at a time for the US. You probably don't need a container at a time for Canada. So just keep that in mind. So once you're ready to go, you get the business number. Now it's time to send stuff in. Now it's exciting. Now the magic happens. We're starting to get sales. And now you've got this new business you have to manage. And so what are you going to do to manage that? So a couple things are, you're going to have taxes. Taxes is going to break down into two buckets. And this is what really scares a lot of people away, but it's not going to scare you because you watched this video. And even though you didn't take anything Kevin said as tax advice, you considered this to be good information to help you with your research. And so again, I'm not saying this is tax advice, but generally speaking, you've got your two buckets of taxes. One is going to be your sales tax. And this is pretty much anywhere you sell. You have sales tax and you have income tax. Sales tax is going to be represented by the GST, HST, and you're going to pay that to the Canadian government. For most people, that ends up being about once per year. So you file once per year to the Canadian government. Your taxes are added on top of the selling price. That's another good thing about Canada. In Europe, you got to factor the fact that the prices are including a 20% approximate VAT, depending on the country. So that eats into the price that you're advertising. Whereas in Canada, it's like the US. Customer checks out, and then depending on where they live, maybe it's 8%, maybe it's 12%, maybe it's whatever percent. They get the GST, HST, whatever else added on. And if you have your business number added into Seller Central in tax settings, Amazon will collect it and give that money to you. And then you go to file it. And then the nice thing is, unlike in the US, where if you were collecting taxes for, like, let's say, state of Missouri or something like that, and you just give them all the money you collected, in Canada, you actually subtract out a few things. So you're going to subtract out your, um, let's say, your what you pay in GST at the borders. You're going to pay that. So that's the nice thing. You're getting paid back for that, basically from your customers, because you're subtracting that out from the sales tax that Amazon collected and gave to you to remit to the government. So you're holding some of that back for yourself to pay yourself back as what they call an input tax credit. And then also some things like FBA fees, things along those lines. Those would be credits. Check with a appropriate tax professional before making credits. Don't just go with what some guy in a YouTube video said, but just things to keep in mind for you. Then your other bucket of taxes is going to be income tax. And so income tax is going to be based on your profits to you, generally speaking, your local government. So me, I'm in the US. So my profits in Canada equate to my US income taxes. And so if I make an extra whatever amount in Canada in profit, then that gets added on to my money that I owe the government, not the whole amount I make, but the taxable amount of my income. And so just keep that in mind. And I can tell you, any tax preparer CPA worth their salt, if you give them the reports, like Amazon gives you a 1099, for example, in Canada, which says, here's your sales in US dollars. And then you have accounted for, and whether it's QuickBooks or Zero, almost all of them have a version that does multiple currency. Your bookkeeper should understand how to do that. If you need a bookkeeper, message me and I'll hook you up with someone that I use who can help you out. But more than anything, you just want to think of it as you've got to pay the local government for sales tax and your government for income tax. Then you're going to be getting this currency. So everything that you're getting in sales and disbursement, that's all going to be in Canadian dollars. And so I use a company called Payoneer as opposed to having Amazon just send all the funds straight into Bank of America. So that way I can hold some of it. And then if I want, when I'm ready to, I get charged a little bit of, it's never itemized. It's basically like a currency conversion fee that's baked into the conversion rate. And so the conversion rate is just going to be a little less favorable than it would have been if you had, if you looked online to see, like, what the conversion rate is. If you look online to see the conversion rate, let's say USD to CAD or British pound to CAD, that's going to be based on what's called the mid-market rate, which is what banks charge each other. But since we're not banks, we're not financial institutions, we don't get those rates. So it's not huge. It generally, depending on if you use a company or use Amazon, it could be anywhere between 0.5% to 2%, depending on your volume. The higher volume you are, the better discounts you get. I tend to find it kind of hard to validate what people say the rates are, because you'd have to like know at that exact time and second, which I guess you could at the time you do it, see what they just charged you and instantly go to, when they give you like, okay, here's the amount you're going to get back. You can do the math to figure out what the conversion rate was, and then go look at the conversion rate, divide them into each other to figure out what the difference is. Hopefully that makes sense. But anyway, don't worry too much about that. But I do like having some control of having it, some of it in another currency. So, like, for example, as we record this, I just filed my GST for the year. And so I have to pay that, what I owe. And so I send that in as a wire transfer from my Canadian dollar account. There is some savings for me there, because I'm not converting it into US dollars and then back into Canadian dollars. And anytime stuff moves back and forth, you lose a little bit. And another thing too is I would highly recommend your PPC charges are taken out of your disbursements as opposed to putting in a credit card. Now, sometimes people will say like, oh, but I have a credit card, there's no international fees. Well, that's another fee. So you're not going to save on the conversions if you're converting. So hopefully that makes sense. So if, let's say you have PPC charges, and let's say you have $1,000 in the month for PPC charges in Canada. So you would have gotten the money, Amazon puts it into your US bank account, let's just say, and then, or you put into a Payoneer account or whatever, and eventually you bring that money back. Now you got to pay Amazon off. So you put it on your credit card. Well, the credit card's going to have to convert it back, your money, into Canadian dollars, and you're going to use money that you converted into US dollars, whatever your local account is, to pay off the credit card. So you had two conversions there. Whereas if you just have it coming out of your disbursement, there's no conversions, so you didn't lose anything. So that's just a little tip there. And then there's just the general maintenance. Now, the nice thing is for PPC, I tend to find sometimes in Canada, once you're up and running, now it's not right away, but once you're up and running, you might be in a situation where you're maintaining your PPC less often than you can even run reports. Like maybe a report is, let's say you can go back 60 days, and there's been times it's been 3.5, 4 months since I optimized it, because it's just kind of going along. Now, granted, that could depend on your niche and your market, but think of it this way: if there's 10-20% of the sales, there's probably 10-20% of the clicks and 10-20% of the impressions. So there's less data, to need to go into. So it's not like you're doubling your workload by going into another country. In fact, oftentimes you've already done a lot of the hard work on the front end, and you're just replicating what you took. So that's why I think international selling is such a great thing to do, once you're up and running, you don't have to register again. You don't have to worry too much about all this other stuff because you've kind of already figured it out. So it just kind of runs on clockwork. Whereas you might go on, let's say Walmart, for example, and you got to figure out a whole new way to write content and a whole new way to do other things. You go on Etsy and you got to learn a new terms of service. You got to learn a new way to send stuff to customers. Whereas on the back end, really the money symbols like different. Like there's CAD next to things as opposed to just a dollar sign. I'm oversimplifying it, but a lot of times people grossly overcomplicate it. And hopefully this has helped to share with you some of the ways that you can make this simpler for yourself. So then the bonus here is that you can rinse and repeat. So you could go into places like UK, Germany, Italy, Japan, etc. All these get a little bit more complicated. UK, for example, is more complex because now all of a sudden you have to worry about VAT, and VAT has more moving pieces and a little bit more complex than GST, especially because it's added into your selling price. Then Germany and some of these other marketplaces you're looking into now, you got to work on translating, but you're kind of leveling up. So it's kind of like a game. So hopefully this video has been helpful. If you'd like more notes on how you can set up your own international selling empire in Canada, down below there will be a link where you can download a free checklist, which will walk you through step by step how you can create your own international selling empire in Canada. And also, if you found this video to be helpful, please consider liking and subscribing. And I wish you the best in your e-commerce journey. Take care.